Hello, welcome to the real world of real estate. And we're going to talk today about why a number of agents will get out of the business in the next 6 to 12 months. Why does this phenomenon happen in a shifting market in real estate? This is where mass number of agents quit the business and why you should think about getting into the business today. We'll see you in a bit. Hello, welcome to the real world of real estate. My name is Sean Policino, and you are on my weekly pet podcast that I do pretty much every day of the week. And I'm a real estate agent with eXp Real Estate, Realty, and I am also running a real estate team, and I am a real estate agent as well. And I produce real estate about between 35 and 45 transactions a year, every year myself, as well as a coach with iconcoaching.com. So if you go check out iconcoaching.com, and you'll find out any one of our real estate coaching programs that myself and Sean Kokoska, my business partner, he owns Icon Coaching, and I'm a coach for his company. Go there, check out the website, amazing coaching programs, and Sean is an amazing coach himself. He was my coach back in 2012 when I hired my first real estate coach, which if you're a real estate agent, you should have a coach. I'm telling you, it'll get you to the next level. He changed things helped me change things in my business that have, pretty much transformed my life. So welcome to the show. And today we're talking about this phenomenon where in the next 6 to 12 months, the market is going to shift. It's actually already started shifting. And in the next 6 to 12 months, a mass number of real estate agents will get out of the business. This happens in these big shifts that we have. Okay. We have our normal seasonality. Sorry about that. Normal seasonality in our business where the market goes up and down. And this typically happens in a cycle, something like this. I'll describe this. In the spring, we get a surge of inventory where people start putting their homes on the market. Going into the summer, it peaks in the summer. It dies around September a little bit, comes down. That trend is over. It starts to trend downward in about late August. And that is because kids are, people made their moves during the summer, and now their kids are starting school. And this is obviously pre-COVID trends. We've noticed a change since COVID because more students are being homeschooled, and there's, less reason to move if you're homeschooling your kids. But we do expect that's going to get back to normal. But this trend of where in September it starts to slow down kind of goes into the holidays, into Thanksgiving and Christmas. We see a really flat spot between Christmas and New Year's. And then after New Year's, it starts to go up. And again, we have that same spring cycle where, people start putting their homes on the market after the New Year's, and it peaks in the summer. The buying season and the selling season peak, and then that trend starts all over again. So this is a normal real estate, what we call seasonality of real estate. And every business has seasonality. We try to build those predictions into our business plan, where if you don't have a written business plan, private message me and I will send you a really simple template where you can create a business plan for your real estate business, specific to real estate. Okay, so what happens is we're talking about these bigger shifts. Some people like to call them bubbles. And we don't really believe this is a bubble. The bubble that was caused in the last downturn in the market in 2006 and 7, that was a bubble. And the bubble was caused by a opening of the financial markets to the consumer. There was an intentional effort to literally give anybody loans to buy a home. In fact, they had reduced the down payment requirements. So literally you could buy with 100% financing, meaning not putting any money down. You could even finance your closing costs. So you literally could walk into a house easier than renting a property to buy a house. So the bubble was caused by that. It was also caused by a lot of fraud in the market, in the secondary market, which is where mortgage companies originate mortgages for buyers of real estate, and then those mortgages are sold to big portfolios, big investors, Wall Street. And Wall Street, there's a market called the secondary market. That's where mortgage-backed securities are sold on the secondary market. Now, I'm not going to try to get really deep in the weeds here, but I wanted you to understand why this bubble was created was because the fraud that was involved, they were rating these mortgage-backed securities improperly. That's one thing. There was another section of fraud where the appraisal process was being controlled by the mortgage loan officer. So pretty much the real estate agent loan officer could pick what appraiser they wanted to use. And of course, there was probably some fraud in the appraisal end of the business where people were picking and paying off appraisers, and appraisers were getting, bringing in unreasonably high appraisals. This caused some bloat in the market as well. Since the collapse, have changed that. Those non-qualifying mortgages are these ones that have reduced it down payment. We still do have very low down payment loans. We have FHA, we have VA, which is 100%. That's for a veteran. We have FHA, which is only 3.5% down, and there is a conventional loan product with only 3% down. So there's still very low down payment products, but they have tightened down the financing criteria on qualifying. So the qualifying for a mortgage definitely is back to pre-balloon processes, meaning normal, like you've got to have certain credit score, you've got to have certain assets in the bank, you have to have certain credit history. You can't have massive massive delinquent credit history and be able to get a loan. So those things, as a kind of a perfect storm, created this huge bubble in the market. And when those folks stopped paying their mortgage and the delinquencies started showing up, that is what caused the mortgage-backed securities to slide on the Wall Street. And then the whole thing came tumbling down, and we were all there to watch it. So that is what happened in 2006, 2007. That's not what's happening today. What's happening today, and the reason we're seeing are going to see a downturn potentially in the housing market, is because inflation is in our economy today. Our economy is struggling with this inflation, which the only way to combat inflation for the government is to raise interest rates. And when they raise the Fed rate, that inversely, sometimes adversely affects, sometimes when I say inversely, meaning sometimes when they raise the Fed rate, mortgage rates actually go down. So it could inversely affect, but then sometimes it adversely affects, where it actually makes mortgage rates go up. We did just see in the last 30 days, the mortgage rates increased about 1.5%. And that caused, the Fed rate went up 0.25%, which raised our mortgage rates about 1.5%. So the reason for that was because the Wall Street wanted to see the Fed raise the rate 0.5 point to combat inflation, and they didn't. They underperformed. So the rate, the mortgage industry responded adversely. Okay, so we have a supply and demand issue in real estate. We have low supply and high demand. So when they raise the rates, that's going to affect the demand. It's going to cool off the demand. And they're saying the other thing, the reason we expect a downturn in the market, in the real estate market, is because the Fed announced when they raised the rate the 0.25 point, they said we're going to raise the rate another 6 or 7 times this year, which means every month, which means we will likely see an increase in the interest rate. We're sitting at right now around the low 4s. We were in the low 3s. We're in about mid 4s now. We expect maybe a 6 or 7% interest rate, real estate interest rate market before the end of the year. What's that going to do to the real estate industry? Well, it's going to affect the sellers and the buyers, but it also is going to affect the real estate agent. And that's what we're talking about here. Why in the next 6 to 12 months will a mass number of real estate agents decide to leave the business? And when they leave the business, that creates a vacuum and it creates an opportunity. And that's why I'm here to tell you that's why you should get into real estate. And I'm talking about into the sales end of it, where you're a real estate agent representing buyers, sellers, and investors when they buy and sell real estate. That's what we're talking about here. Now, if you're interested in doing that, reach out to me. My phone number is 818-338-8787. You'll see it scrolling on the screen here. You can also find it down in the description below, whatever channel you're seeing this on. We are across all platforms. Please like and subscribe and share the content if you like it. If you know anybody that's thinking about buying a home, selling a home, investing in real estate, or anybody that wants to become a real estate investor, or anybody that wants to become a real estate agent. Being a real estate agent, we so often get put into this group of salespeople. And yes, it does require customer service skills and sales skills, but we are a business. I run a profit and loss every month. I'm registered as a corporation. I am a business, and I am a business entity, and I treat my business like a business, and that's what we teach our agents to do. So if this is a business, means you can sell it later down the road. You can have family come in and run it with you. We have employees. We've hired employees, so we pay salaries and benefits. We have stock options. We're a publicly traded company. We're the fastest growing and soon to be the largest real estate company in history. In the next 5 years, our plan is to be at 500,000 agents. Today, we're at 78,000, growing faster than any other real estate company has in history. It took Keller Williams 25 years to get to over 60,000 agents. It took us about 7.5 years. So that's incredible growth. And we're publicly traded on NASDAQ. Our agents and our staffs have ownership in the company, kind of like American Airlines. We are disruptive in the industry. We're taking the cloud-based real estate model to the real estate industry. They're the first to pioneer it and the biggest and one of the best. So if you're interested in knowing that, click below to my calendar link, schedule with me. You can call me, private message me, whatever, send up smoke signals, whatever you'd like. So in this market that we're in today, right now, market of the moment, we are seeing the shift. Like I said, in the last 30 days, rates went up 1.5 points. When rates go up like that, there are buyers that have just been recently pre-qualified that instantly lost $30,000 in buying power because of that rate increase. So there's buyers that were maybe already running at their max, looking for a property. In LA, our median home price is about $880,000. So it's very expensive. So we're already seeing, because of that lack of inventory, there's not a lot of choice in the market for buyers. So if you're a real estate agent and you're working strictly with buyers, then it is very difficult to find a home for your buyer and it's a competition. It's very difficult for your buyers to get their offer accepted, especially if they're a low down payment loan or have credit issues. If they're a veteran and they're 100% financing, it's almost impossible for a veteran to buy a house in the LA market. And this is unfortunate. If you're a seller's agent, you work with sellers, then why are the sellers not moving? It's because the home prices have gone up so much and they have a hard time finding a place to move to. So why should they sell their home? So more people today are holding on to their homes, especially since everything else is inflated because of inflation: gas, food, construction materials. Doesn't matter what it is, it's affected by inflation. So that's the market of the moment that we're in today. And we are seeing this situation where the government has very little options. They have to raise the interest rates in order to combat the inflation, which hurts the real estate market, hurts the economy as a whole. And it's important you as a real estate agent understand this so that you can verbalize this to your clients, because a lot of folks don't understand the economy and they don't understand what's going on. And so we don't make the market. It's our job as agents to interpret it for them. So with respect to why in the next 6 to 12 months, a bunch of agents are going to leave the business, and why you should get in the business, that is because it's going to get harder than it already has. As the federal government raises the rates and as mortgage rates go up, we saw this happen back in the mid-'80s, was the last time we had this kind of inflation in the market. Now, it was caused for a different reason. The government was spending a lot of money, and that is the cause of it here. But what's different about this situation is the government is printing money. more than they ever have before. Last year, they printed 36% of the total money supply, and they have been printing over 10% of the money supply every year, year over year, since Bush Jr. was in office. And so ever since 9/11, they've been printing money, and that was not what happened in the 80s. In the 80s, it was stagflation with Jimmy Carter, and they just were spending a ton of money, and we had inflation in the market, and that sparked the inflation. And sorry to say, the interest rates on real estate got up to 18.63% at the height. Will we see those kind of rates today? A lot of people say no, we probably won't, but we are probably headed for a very different real estate interest rate market than what we're used to. Now, I got to see a low market, a high market, lower market in my 16-year career. And there's many agents that have been doing this much longer than me and have experienced that market. So I can be a service to my clients in a different way than a brand new agent that has never been in that kind of market. They've only experienced the last market of the last year, which has been a very abnormal market. So once you do something long enough, abnormal starts to become normal. And that's where we've been. We've been in a very low inventory market for a long time, a very hot market, a lot of demand, and that's going to change. So there are going to be lots of agents that aren't going to be able to make money. They're not running their business like a business. They are going to fail. They're not working with buyers and sellers. They're only working with one or the other, or they just don't have a consistent business model, and they're going to fail. A lot of businesses are going to fail, and real estate businesses will fail. Those agents will stop. Now, we know the statistic for a new agent is 90% of new agents fail within the first year, and 85% of the ones that make it past a year fail within 5 years. We know this because we are, being a real estate agent, we're licensed, kind of like an attorney. If an attorney doesn't renew his license, then the bar association knows, so they can track that. Real estate agents are the same way. We have a real estate license. We also pay dues to our state board and our national board called NAR, National Association of Realtors. And so they track those metrics, and we can tell when agents are getting out of the business, and that's already starting to happen. But this is an opportunity. If you get into business, you get into business with us at EXP, or you get into business with us as your coach at iconcoaching.com, which means you don't have to join EXP, but you just coach with us. We will coach you on strategies to prepare yourself. Gary Keller wrote a great book called Shift, and it's all about this shift that we are starting to see in the real estate industry. He also wrote a great book called The Millionaire Real Estate Agent. Both of these books are a must read. I'll add a third book that was written by him. And I say this because none of the other real estate leaders, like the head CEO of Remax, I couldn't even tell you his name. And I definitely know he hasn't written a book. Now, Keller Williams is the largest real estate company in history. And Gary Keller is the head, and the school, Baylor University School of Business was named after him. He's also currently a professor at the School of Business. He teaches, and I have been a Keller Williams agent, by the way, for 16 years, in case you didn't know that, but he teaches business principles and business models for your real estate business. And that's what you get when you coach with us. We teach you those sound models and those strategies that are going to get you through the tough times, as well as have you surge ahead in advantage. When this vacuum is created and these agents leave, the agents that are left standing and the new ones that get in the business are going to be propelled ahead on the other side when the market starts to turn, kind of like a wave. If you can imagine a surfer, he gets up to the top. If he makes it over and he gets to the right spot on that wave, he gets surged ahead and is propelled by that wave instead of crushed by it. And that's what's going to happen in the real estate industry. It's already started. So if you're interested in learning how you can weatherize your business, your real estate business, how you can capitalize on buyers, sellers, investors, and commercial real estate, then reach out to me. I put this content out for free. I'm hoping that you like it. Please like, share, comment. We will see you again. It's a pleasure to do this. This is what I enjoy doing, as well as helping clients buy a home, sell a house, or invest in real estate. Again, my number is 818-338-8787. You can see it below or on the screen wherever you're watching this. And if you want to know more about different topics, please comment below. Let me know, whatever channel you're on, comment below on what topics you want me to talk about, and I'll do some research and definitely bring that to you. So look forward to it. Thanks for joining us. Check us out, the Policino Real Estate Team. Check us out, The Real World of Real Estate. My name is Sean Policino, and we'll talk to you later.